You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for the Option Block, typically your bi-weekly source for all things options related. This week, only getting one episode. Don't blame us. Blame the old MLK Day. Markets, of course, were closed on Monday this week. But we're back, rearing and ready to go. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so around these parts, and we are not biased at all, Options Insider Radio Network. I want to thank all of you out there who continue to drive up my bandwidth bills. They're getting impressive. Of course, come on the heels of a record year out there for the network. This January marks our 16th anniversary. We're legal. We could drive now. Crazy to say that out loud. So, of course, thanks to all of you who help contribute to that. If you like what you hear, do keep rating and reviewing this show, the network. You can also do it in the app stores for our app, wherever you feel like leaving a review. It clearly does help new people continue to discover the content. We thank all of you out there for helping to do just that. Of course, if you want to go above and beyond, you need more epic options content in your life. And hey, who doesn't? Then there's only one thing to do. You got to go to theoptionsinsider.com/secret club. Once you're there, you'll see what the secret club has to offer, including jumping past the line for fun live streams, awesome access to the exclusive pro podcast feed, which has almost a couple 100 hours now worth of content on there. You could just sign up for that and just listen to that and binge it for months and not be done. And then, of course, great pro Q&A. Just had Scott Nations on yesterday. He just loves coming in and answering your questions. All these folks love it. So if you want to get in there and pick the brains, some of the best minds in the world of options and derivatives, only one place to go, theoptionsinsider.com/secret club. And of course, the giveaways, not too late to get entered for the drawing for the January Pro Trading Crate. Let's see who's joining us for this episode here, the only episode of this week. Let's go out first to, usually we go to the dark and stormy shores of Maine to welcome on this character. Today we're going a little bit farther south, I believe, to North Carolina, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Maybe a little bit less rocking this week, maybe a little bit more subdued. Mr. Rock Lobster, welcome back to the show, sir.
It is good to be back. Of course, it is hard to imagine me being more grumpier or more sour than I normally am. But it is possible. It is possible. But we turned the corner. We're moving along. So things are okay here. I guess my southern station is the coast of North Carolina. So that is where I are.
Is there a big clam piracy problem down there as well? Did you bring your shotgun?
Well, the funny thing about it down here where I am is this, everybody is armed. So I actually don't have to bring one. I could just borrow.
Can I borrow your shotgun to run off these clam pirates, neighbor?
Yes. So yeah, clam piracy is not a problem here because they do not have the tides that we have in Maine. So while there are tidal areas, I don't think clamming is here. There's a little bit of oystering, but I don't know about clams, but I could be totally wrong about that.
You walk out there tomorrow morning, you see that same guy who robs your coast every morning, pull it into the bay there. You'd be like, wow, A, you're a well-traveled clam pirate, and B, you might even tip your cap to that guy at that point. The guy puts the effort in.
Yeah, I mean, that would be an effort to harangue me, taking a small airboat.
It's a long way to go to a little fan boat.
Yeah, it's a long way.
Good times. And let's see, also joining us for these good times, not so much for the market, though, today, we have the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show to you as well.
Always happy to be here. And you'll be happy to know that I can report we are clam pirate free here on the Fox River in St. Charles.
Fox River clam pirate free since 2013, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's do it. Let us commence operations out here. It's time for the trading block, the portion of the show. We break down what the heck is trading out there, and the market's not really liking what they're seeing out there today. We were rallying. We were north of 4,000 for a little bit earlier this week. Now we have come back. We got back to the 39.5 level yesterday, and now pretty much dropping right back down to about the 3,900 level. S&P off right around 0.2% to kick off the show here. The Dow off a similar percent. The NASDAQ closing in on 1%, about 0.95% to the dark side. So a lot more economic data coming in to keep spooking folks. You know, for a while there, the narrative was bad data for the economy was good for the markets because everyone thought, okay, that means the Fed's going to back off. Now we're starting to see the analysis that maybe bad data for the economy is just bad data for the markets as well, which is an interesting way for the markets to come full circle, I suppose, out there. They're not whistling past the graveyard anymore. Either way, intriguing stuff out there. Can we hold this 3,900 level? Are we going to rally past it back up to 4,000 again? Are we going to keep sinking back down to the 3,800s and below? We shall see. Getting into the vol products out there. Vol in the form of VIX, 2120 right now. That's up about 2.1 points from where it was. Remember, all the way back a week ago, we had no show on Monday. It hit a high of about 2170 today, 2169 to be precise out there. So getting a little bit more vol back. Remember, we were at an 18 handle not too long ago, so that's a little bit extra juice. VVIX also getting frothier again. Remember, I saw it hit like a 73 on vol views recently. I said, that's probably not sustainable for very long. And at least for now, the answer is it's not. It's an 86 right now, up 10 points from where it was this time last week. VXX 1290 up about half a point. UVXY back to an even 6. Up about 1/3 of a point from last show. SVIX 16 even, down 0.6 of a point. Remember, SVIX hit its high for the year on the show last week as VIX was plumbing new depths. Got up to, I think it was about a 1770. Let's see, we're about 17 and a quarter was the high for the year out there. Obviously, about a point and change below that now. UVIX also at a 6 even, up 1.5 points. So UVIX roaring back to life. It was in a 4 handle not too long ago. So intriguing. And now back even keel with UVXY. That is interesting because UVIX was really winning the race to zero there. And now we do have a confirmed reverse split for one of them. We'll see if we get a confirmed reverse split for both. But one of them at least going to be going back up soon. And VolQ 2415 up about 0.15. So it's at 24 last week, up a whopping 0.15 this week. It's not a huge evolution in NASDAQ vol. Let's go around the horn the opposite of the way we started. Let's go out to the land of St. Charles. Mr. Uncle Mike, what is catching your eye out there in a definitely not Uncle Mike type of day in the markets?
Well, today what's catching my eye is 3,900. I was thinking about it this morning. I actually added some deltas on the dip this morning. And from there, I'm just looking at this. 3,900 seems to be another number that we keep coming back to in some way, shape, or form. And we're staying there today. We have theoretically support there today. We have bounce off of it a few times throughout last December and October. It was bounced to the downside off of it in October, used it as support back in late August, early September, used it as support in July, used it as kind of an area of resistance in earlier summer, as well as an area of support back in May. So we've had a lot of experience with the 3,900 level over the course of the last 6-7 months. Now, does that mean we're going to hold there? Does that mean we're going to bounce off of it and go higher? Who knows? But 3,900 is definitely something that caught my eye today. That is for sure. A couple other things that are happening right now in the marketplace. We're continuing to rally in bonds. So over the course of the new year, the 10-year note has had quite the rally since we started the new year. So far, it looks like the bond traders believe that we might not be continuing to raise rates always until eternity. Who knows if that's the case, but that's kind of it's always good to see a little bit of a pop in something if you own it. So that's the case there. I actually have sold some covered call premium yesterday in that as well. Not necessarily because my bullishness for bonds is fading, but we've had quite the run the last couple of weeks. And if I get called away right here, I would be okay with that, with where we are. So that's kind of where I can't give specifics. Obviously, my compliance people don't typically look too kindly with that. But that's kind of what I'm looking at this stage. In terms of the futures market, we do have oil continuing to hold around that 80 level. We're still off of the highs from where it once was, but we do still have oil around the 80 level. I really can't say nasty things about Bitcoin, at least today, because of the fact that it is still over 20,000. So, you know what? Maybe I should change my ways, and maybe Bitcoin could be a good, prudent investment for the long haul. Maybe not. Definitely not. But it is over 20,000. So we do have that going for it. We have XLE getting over to the sectors of the marketplace. XLE is knocking on the door of 90. So we are still we do have a rally in that, and that's still at pretty high levels right now. And everything else is pretty much down across the board. We don't necessarily, consumer discretionaries are down maybe a little bit more than the rest of the marketplace. But overall, we don't necessarily have like one thing that's killing the market at this point in time. So we do have that happening. It is pretty a broad-based sell-off. Now, the sell-off itself is just kind of from the standpoint as to where it was a few days ago. Markets were down roughly 100 points. And I think a lot of it started Goldman Sachs' earnings announcement really was not too good on Monday. So just to give you guys an idea of it, Goldman Sachs last Friday the 13th, the grim day, closed at 374, and then it closed Monday at 349. That's a pretty big move in the Goldman Sachs world. They don't take too kindly to their stock going down. So I know Mark Longo has a lot of fond memories of working with the Goldman Sachs traders from back in his younger day, but they typically don't like their stock going down. So to have that big of a move does kind of have an impact on the marketplace itself. So that's what I'm seeing right now. I think everything's about the Fed at this point still. Yes, we are in earnings season. I think there are some earnings moves that are going to make the market move. In this case, maybe 2% as to what I believe Goldman kind of started things off with on Monday. But the real moving and shaking, I think, is going to be based upon what Mr. Powell has to say. And that is my 2 cents and what I'm seeing right now.
I know you were saying last week, Uncle Mike, coming into the new year, you were as bullish as you have been in some time. Judging by the fact that you're adding some deltas, these recent sell-offs hasn't changed that at all.
Definitely not. I think there's a lot of reason to be bullish this year. Am I seeing us going to 5,000 on the S&P? No, I don't necessarily think we're going to be at all-time highs, but I think there are a lot of reasons to be bullish this year. And the second that there is some type of news saying, well, we might not continue to raise rates, or some type of news to where we're not going to raise rates as much as we thought we were, or we might be closer to the end, I think that's going to be a major catalyst for both a stock and a bond rally, because that's seem to be the major catalyst for going down the opposite way.
You heard it here first, listeners. Take the headline, run with it now. Uncle Mike says S&P to 5,000 by year end. Don't bury the lead. Start with that one. You could call his compliance if you don't agree out there. Let's go out to a guy who probably doesn't agree. He's not bullish, really. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI. Mr. Rock Lobster, We rally, we sell off. Now we're back in the sell-off phase again. Vol is starting to get a little bit of a mild bid to it. We're back in a 20 handle, which is certainly respectable. But what is catching your eye out there in these somewhat weak markets today, sir?
Well, today is probably the second day. Let's see, what's today? Thursday. So you have a lower period. So the market has been basically less volatile than we've been in quite a while, actually. So 30-day vol is like 18%. So a lot of the action is subsiding. The second part is like bad economic news is bad again, which I think is good, meaning the Fed is getting out of the business of this accommodative, ridiculous policy, and that I think really has been a ridiculous. I understand the pandemic; they had to get because we basically turned the economy off, which is still everybody will be arguing about that whether it's a good idea or not. But now we're at the point where now we have higher rates, we have some inflation, and I like Mike's 3,900 is kind of held as our I guess it's the gravitational pull area for at least 6 months, and I think that's right around. Let's see, we topped out at 4,800, so that's 900 points down. So that's almost it's not quite 20% from the top, but pretty close. So it's a reasonable place unless things pitch over the edge, but traders clearly think that the rate hikes are going to start to slow this year somewhat. The only play, so I've seen, so oil prices like natural gas is in the can. Yeah, some metals are heating up again price wise. Still haven't seen food costs drop. I don't know about if you guys see that in your grocery stores, but things are still pretty expensive, quite a bit. So there'll be at some point where that won't be, but at least for right now, I still think, we're still running an inflation of 6.5%, which is pretty high. But as far as trade goes, I think we're going to just stay in an orbiting market, at least until the Fed stops raising. So there will always be that, rally because they're going to slow down, and there'll be a sell-off when they don't. And I don't think that's going to change a whole lot. But and we'll see if there's any actual positive news to get stocks rallying again. But I still think we'll have an orbiting market. I see us being, a little higher at the end of the year, being any disasters or anything like that. And a lot of stocks have just, a lot of those, a lot of big stocks have been cut in half. I think Apple being the exception, but still, it got pretty close down to 110 or something like that. Not very long ago. I'm trying to remember how low Apple got recently, but I did have a bunch of, so it traded around 122 or something, 23. But it's rallied. So long story short, there's a lot less volatility than there was. Generally, that's where bull markets start, in relatively low volatility. It would be much more bullish if the vol would drop, I think, into the, the 12, 13% range, realized vol. Because generally what happens when you see that is the market's traders are not reacting to every news story about whatever the prevailing headline was. It's more like, okay, since it's more of the same, we're going to continue to do what we're doing. So when you still have that high realized vol, it's still very bearish and very illiquid. So again, we're still at a higher state, but not near as high as we were last year. And we'll see if that continues. So as of right now, I think earnings actually might even matter a little bit. But I do think this is probably a good short-term vol selling area. Buying puts in VIX, buying puts in VXX or UVXY into the recent rally we just had. I think we were just trading above 21 because you're not getting the supportive move in the underlying. And generally, rallies and VIX just don't hold up when we don't have supportive moves. So as the earnings come out, generally vol comes in a little. That's going to be happening, to the end of the month when, 50% of the big earnings will be out. I know we have some early Feb that week. So, I get listeners, you want to look for something. Yeah. When you have days like today where you're going to have a close to close move is going to be about 0.5%. Like it's hard for VIX to hold up in that. So anyway, so that's what I see. And I do agree, and I think conditions are probably getting a little better rather than worse because a lot of the Fed moves so fast to front load everything. And it was good. And the market reacted like it should. And now, okay, let's see how the dust clears and get back on. And if rates aren't going higher, it's clear that a lot of companies still can make some money even with interest rates higher. Other stuff like housing is going to slow down. And, a slowdown is going to reduce prices. There's no way around it. So some of those effects are going to start coming through. But I actually strangely I'm sharing a little touch of the TOSAW optimism for the rest of the year.
Uh-oh, look out below. 2000, here we come. The rock lobster is 1800. The rock lobster is optimistic. Uncle Mike, if you never had any more reason to sell, you do now, sir. If I don't hear you on the rest of the show because you're busy hitting the bid on everything, I will certainly understand. A positive, optimistic rock lobster. I'm scared. I'm nervous for our future.
I think I might turn bearish now. Just the fact that not necessarily because he's so bullish, but because of the fact that we're both in agreement. That's something to where it can be a scary thing. If we're both bullish, that's scary.
Go to cash now, listeners, before the end of the show. Because who knows what other shoe is waiting to drop now.
The screaming from the listeners.
I've never been more nervous. I've never been more scared. The hairs of the back of my neck standing up. What is to come for us now, listeners? I don't know. We'll keep an eye on it. It may break before the end of the show. We shall see. But madness afoot out here, listener. Let's see if the madness is translating into any volume right now. And the answer is kind of. VIX putting up some decent numbers right now. 387,000 contracts on the tape right now. That looks even better when you see the ADV is 571,000. So it certainly seems on pace to hit that, even though that ADV is up over 70,000 from where it was just a few weeks ago. It was threatening to break 500K in the wrong direction not too long ago. So that ADV has surged and the volume keeping pace. SPY 5.85 million. The ADV about 8.25 million out there. The S 1.7 million. The ADV about 2.6 million out there. You know the deal now in SPX. Let's play that game yet again. How many of the most active contracts in the S right now are expiring right now today as we speak? See, in the top 20, that's a little bit different. I see one, I see two, a whopping 2 in the top 20 today that are not expiring today. They're expiring tomorrow. So you got a whole 24 hours on that trade. But outside of that, yeah, it's all 0 day. Let's go out a little bit farther. Let's go to the top 40. I see 1, 2 more, 3, 4, 5. So that makes a total of 7 of the top 40. That's the highest we've seen in quite some time. 7, a whopping 7 of the top 40 contracts in SPX right now, listeners, are not expiring today. And about 4 of those 7 are expiring tomorrow. Couple are March, and that's really about it. So yes, once again, SPX playing that close to the fire game out there. Are you loving the 0DTE? Are you not? We had that pro Q&A with Scott Nations yesterday, and he was a little bit dismissive of this trend out here. He thinks it's kind of just a fad. It's just gambling. Prompted some debate with myself and Mr. P on the Options Bootcamp show, which led to our question of the week this week, which is, the 0DTE trend exploded this last year. Is it just a fad or is it the wave of the future? That's live right now over there on our @options. So get over there to vote. We'll reveal the results such as they are in a little bit. The S, like I said, 1.7 million right now. So a good chunk of that, probably closing in on 1 million, are the 0DTE. IWM, 575,000 contracts. The ADV, 773. So small caps moving and shaking out there today. Excuse me. Let's see. Small caps off about 1.1% out there. So leading the dance, outpacing the NASDAQ to the dark side today. And the Q is 1.65 million. The ADV about 2.7 million out there. Let's go to the single names. Is today a day that the single names have been forgotten? The answer is no. Even though number 10 Usually when we see number 10 in the top 10, we can say, oh, it's kind of a sleepy day because we have number 10 is Alphabet. But it's putting up some numbers today. It's not $1.20, $1.30. It's actually 223,000 contracts. That's what it costs you to break into the top 10 today. So that's respectable. I can't slam that. Alphabet's actually up about 2% on the day. So interesting day for good old Alphabet. So number 9, we've got Softy. Used to be the Rock Lobster's favorite. Not sure if it is anymore. 246,000 contracts. Softy off $3.6 or 1.5%. So Softy moving in exactly the opposite direction. 232 and change right now. Still a ways north of its 52-week low. Almost $20 north of it. That was 213 and about a half. They set that a little while ago out there. Number 8, AMC. This is probably here because it is National Popcorn Day, so everyone's slinging themselves some AMC. 247,000 contracts on the tape for them. National Popcorn Day, not looking good for AMC, off 11 cents or about 2%, trading about $5.55 right now. Let's see on the highs. The high for AMC, this thing got up to $25.50 back last August. Wow. And then right back down, the low for the year, 3 3/4. They set that back. Looks like right at the end of last year, beginning of this year is when they hit that level. So, yeah, intriguing stuff. National Popcorn Day, not enough to lift AMC. Maybe National Gold Miners Day. Maybe that'll be the thing. Number 7, a name that has quite the turnaround, or has had quite the turnaround since we did our poll. This is Meta. 266,000, trading 135.96, up about $3 today or 2.2%. Of course, when we did our poll a month and change ago, it was $88. So this thing has had quite the resurgence. Again, good for 266,000 contracts. Number 6, what's up with this one? Are they going the way of the dodo? Are they not? Today it looks like it's going the way of the dodo again. Bed Bath & Beyond, 364, off 30 cents or about 8% on the day. This name, we talked about it recently. It shot from $1 and change all the way up to 4 something. Let's look at it over the last 5 days. It got up to 5 1/4 last Thursday, and then sold off again the next day, this Tuesday, to $3.50. Back up to 470 or so on Wednesday, and then back down to 370 right now. So this thing has been all over the place over the past. The low was $1.31 on January 6th. So a lot of living has been done out here in good old Bed Bath & Beyond. Apparently they are heading to the great beyond again. 287,000 contracts on the tape for them. Number 5, going to the chip zone. AMD taking the number 5 spot, 323,000 contracts. AMD off about 260, trading 67.90 right now. It's about 3 3/4%. Good for 323,000 contracts for them. That's actually a little light for them. Usually we expect somewhere around 400K, but hey, in these markets, beggars cannot be choosers. Number 4, NVIDIA. Also still hanging out in the chip zone. 385,000 contracts for them. A little bit more respectable. They're off about $5 today. Trading 168.80, about 2.9% for them. Still, though, about 60 handles above their 52-week low, which was 108 that they set back a few months ago. Number 3, you know what it is by now, listeners. You've done this dance a few times. It's the Amazonians. 566,000 contracts. Amazon, 93 3/4, off about $1.70 or about 1 3/4%. Their low was 81.43. They set that a couple of months ago as well. Actually, they set it back, about exactly, actually a little less than a month ago. It was December 28th they hit that level. So they've had a nice little pop since then. Of course, they've also come off their highs, they said about a week ago, of 98 and change. So intriguing stuff for the Amazonians. Good for number 3. Number 2, it's the fruit company. Again, kind of a light day. The Apple volume trending in the wrong direction. 653,000 contracts only today. Again, it's been a while since we've seen Apple kind of looking this sluggish. It's only off about 30 cents right now. Let's see, on the day, it got as low as 133 3/4, and it has a high of 135.39. So interesting range out there for Apple. So they have rallied at about $1.20 from its low on the day. Like I said, Apple, or I should say the market, really hates when Apple is red, and they're doing their darndest to make it green today. I'm not quite there yet. Still off about 1/4 on the day. Intriguing stuff for Apple. Again, only good for 653,000 contracts. That's a little more than a third of what our number 1 offender is putting up today, listeners. This is Tesla. 1.71 million contracts on the tape for Tesla. Off about $1.70, trading 127 and change right now. Again, they have bounced well off their 52-week low of 101.81. And then they started coming out with their price cuts a few weeks ago. That really seemed to, or was it last week? They really just seemed to spook everybody, including a lot of the other automakers and certainly all the EV makers. They all got caught up in that. Oh, maybe the bloom is off the EV rose. either way, that spooked a lot of people, sent it into a bit of a nosedive. They were trading 131 and about a half just a couple of sessions ago. So looked like they had turned things around, but yeah, they hit that low of 101. It must have been intraday back on the 3rd here because they closed at 108 that day. So crazy rockin' times out there. Also crazy rockin' times for earnings as we are back in it again. Full force, listeners. Tuesday, we had Morgan Stanley, Goldman Sachs. Uncle Mac was just talking about them. United Airlines and Interactive Brokers. Wednesday, Schwab, PNC, Alcoa. They have the aluminum business. Discover Financial Services and Wintrust. Thursday, P&G, Comerica, Northern Trust, and the old Flicks. And tomorrow we got our buddies Ally. Just talking with Mr. Bryan yesterday. Things seem like they're rocking and rolling over there at Ally, but we'll find out the results tomorrow over there. Luckily for you folks, you don't have to wait because they have the results right now, hot off the presses from our friends over there at Orats. Let's go out for today. Let's go to P&G. They were before the bell. They were trading 146.41 going into their announcement. They're pricing in 2.7%. They delivered 1.5%. So a little bit of underperformance for them. That's kind of interesting. Let's go to the aluminum. They're popping off last night. Alcoa. They were 53.5 going into their announcement last night. They're pricing in 6.8%. They delivered 3.3%. So a little bit of underperformance going on here so far, listeners. That's intriguing. Let's look a little further ahead, see what's cooking here. Netflix after the bell today, 326 in the third. That's where the stock was when we ran this report. They're pricing in $34.50. In the past, they've moved $31.20. So a fair bit of extra juice out there. Is it worth it, listeners? $3.30 extra out there in Netflix. Again, Netflix seems like every year or two, they really have just an outsized quarter, usually to the downside. And they just blow the doors off from a vol perspective. They just had one, though, less than a year ago. That's when they had that big turnaround last year to the dark side. Are they due for another one? Probably not yet, but we shall see. They're pricing in a fair amount of juice out there. Everything streaming these days is very volatile. Ally, Bryan and Company, they are Friday before the bell. 27 even is where they were trading as of this report. They're pricing in $1.80. In the past, they've moved $1.13. So, wow, fair amount of extra juice. What's cooking in Ally land that they're looking at that much extra juice? Intriguing stuff out there. Let's go a little bit farther out. Let's go to GE, 24th before the bell. 79.25 is where they were trading. They're pricing in $3.66. In the past, they moved $3.33. So a whopping 33 cents worth of extra juice. Is it warranted? We shall find out. Good old Softy, 24th after the bell. $235.81 is where they were trading when we ran this report. They're pricing in $11. In the past, they moved $8.37. So that's a fair chunk of extra juice in Softy. I suppose that makes some sense. There is a fair amount of regulatory concern hanging over them right now. Is that enough for $2.60 worth of extra juice? Oh, that's a question you have to answer for yourselves, listeners. Let's go out to our friends across the street for now. I guess we'll find out. I forgot when they announced they are moving, but they are our friends over there. Boeing, I will miss their delicious lunches there in their cafeteria there. 25th before the bell. 209.41 is where they were going into their announcement. They're pricing in $9. In the past, they moved $8.51. So 50 odd cents worth of extra juice. We could keep going. We got Tesla. Let's do one more. Tesla, 25th after the bell. 128.78 is where they were when we ran these numbers. They're pricing, oh my goodness, they're pricing in 11.27, listeners. In the past, they've moved 6.72. Now, A, that may sound like a ton of extra juice, but B, we've seen Tesla move that much in a day easily. So it's hard to argue that it isn't merited out there, but still, not quite 2x, but pretty darn close to it from the straddle and vol perspective out there. So Tesla pricing in a banger, and given what's been going on out there of late, who can argue? As we see if we can find some bangers of our own, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's get weird. Let's get wild. Let's see what we can find out there on a kind of interesting day out there in the markets. Spoiler alert, a lot of bearish trades going up today, listeners. That's kind of just the nature of the beast. Let's kick it off out there in Pacific Biosciences of California, Inc., a.k.a. PACB is the ticker symbol out there. Trading 1096, off about $1 or a little over 8% today. It's not a great day for PACB. They manufacture systems for gene sequencing and novel real-time biological observation. And trading about $11 right now. They were trading 1066 a year ago, so they're up slightly on the year. They rallied to their high for the year of $14.20. They hit $12 back in March 1st. Then they sold off again to $4.10. Then it's showing them they got somewhere. They rallied pretty much the rest of the year, right back up to just a couple sessions ago. It's Jan 17th. They say they closed at 12:02. It's showing me a print here somewhere at 14:20. That must have been intraday, either January 17th or it was back on March 1st. Either way, that's the only time they really closed above $12 this past year. So intriguing stuff. And now they're obviously coming back down the other side of this one there, listeners. Intriguing stuff. Looks like not a lot of love for them right now. Looking at the options market, that lack of love seems to be continuing. Someone came out this morning and unloaded 10,000 of the March 12 calls. Remember, I said they're trading at 1096 right now. They sold them for $1.15. They did it when the stock was a little bit higher, 1106. That's an 85 vol. They crushed the bid on these. That's a $11 stock. You're getting $1.15 for these calls. You're selling it at pretty close to about $1 away from the 52-week high. That's not a terrible trade, all things considered, Mr. Rock Lobster. Now, there are earnings coming up. That can maybe change your mind. There are earnings on February 15th. So that's obviously why they're getting such a hefty amount of premium for these calls, because they are going through earnings. So maybe that changes your mind. Maybe it isn't merited writing a call in a bioscience for a couple of months for $1.15 if you have to go through earnings. Maybe that's not worth it to you. But I am intrigued. Mr. Rock Lobster, what say you? Are you equally intrigued by these fairly juicy PACB March 12 calls for a nice $1.15, sir?
It does seem like a call override, doesn't it?
Oh, very much so. Yeah, they're not buying these.
I mean, it's a little juicy. It's a juicy call override. The stock was just $8 as I look at it. So, I mean, it was $8 at the beginning of the month. So that's somebody saying, hey, maybe I'll just take this $1 and run and be happy about it. So I'd like to parse it more, but I think this is just a simple path on this one.
Take your $1 while you can. Hey, the stock's only $11. $1.15? That's a meaningful dividend you just added for yourself there, yes, Mr. Rock Lobster.
Not bad.
Not bad work if you can get it, listeners out there. So if you are looking for some interesting additional dividend yields and you want to own yourself a little bit of Pacific Biosciences, then perhaps PACB is the place you want to be right now for some overwriting. Let's go out to the other side of the script, Mr. Rock Lobster. A lot of people buying puts out there today. I wonder why. Let's get out to New Relic Inc. This looks like a newcomer here. This is a San Fran-based tech company. They make cloud-based software to allow owners to track the performances of their services. Wow, that's about as vague as it gets. Ticker symbol NEWR, NEWR, trading about $57 even today, off about $1 or about 1.75% on the year. Let's see, a year ago was trading, my goodness, 105.59, and they got up to their high for the year of 110.96. That was on February 8th, and then it looks like all things invasion and everything else just weighed heavily on this name. They hit their high on February 8th. By February 24th, they were trading $63. They got cut almost in half just in the span of a couple of weeks. So clearly a rough couple of weeks, probably some bad earnings mixed in there. And then they tried to rally it up to $71 in April. Then that failed, and they sold off to their 52-week low of $41.66. They hit that on June 14th. Then they were trying to rally it again. They got up to $68 again in August. And since then, they've kind of been trending lower again, back to where they're right now, $57. So second half of the year, kind of a bit of a lost period. They rallied it, but not enough. And now we are, again, $57 even right now. And looks like somebody, Mr. Rock Lobster, is... First off, this market was atrocious. We got someone coming in, and looks like with this market, who knows? I'll have to go dig and see what other prints they put up after this, if there were any. This is the Jan 2024, so next year, 35 puts going up 2,000 times today, listeners, for $2.35. And in case you're wondering, the market was 35 cents at $3.50. That's a good one. That's a good one. Let's see here. They traded after that, and the market was $2.50 at $3.50. So I was hoping they didn't buy these. That seemed like a pretty atrocious level. If they were $2.50 bid out after this trade, I'm going to guess they probably sold these bad boys here, even though, what is the ADV out here in NEWR? It's a whopping 89 contracts, hence that atrocious market, listeners. So it looks like, Mr. Rock Lobster, we can maybe flip the script and say, let's hope that they sold these bad boys. Is that your takeaway as well? By the way, there are earnings between now and next January. The next announcement is on February 7th. This is a 58 vol. Mr. Rock Lobster, you think they sold these as well, or you think maybe they paid through the nose for these bad boys?
Well, I'm just looking at the market going out, and they're 195 bid at 3. So normally, they're bid 195, but if you were trading and you sold these, you'd be a 195 bid. They're not in a rush to buy these puts back. So that's kind of what it seems like to me. It seems like on balance, the liquidity provider, sold these puts to somebody, and somebody bought them actually. And now the liquidity provider is happy to be 195 bid going out. That's the way, just looking at the markets going out. I mean, that's what I would have done if I traded these things. So,
well, they only traded 10 more contracts on the day, and it was 2 minutes later, and the market for those was 250 at 350. So they were 2.5. Wow. They were 2.5 bid coming out, which would make me think that that the customer probably sold these.
Oh, really? Okay. What price were these? Did these trade again?
$2.35.
Oh, so the customer sells them $2.35, and then they bid them $2.50 going out
in their face. Well, this thing only trades 80 contracts a day.
that might be a little mercenary, even now. They're only 195 bid. So maybe somebody was just mad they didn't get to participate at 235. I don't know on this one. I'm going to say on balance, I think it was maybe the Flowmaster knows, but I would, my guess, just based on where the current pricing is, looking at it, that the paper was the buyer and liquidity and the accommodating seller was like the house or the broker coming over the other side. But
can't say I'm hugely loving paying $2.35 for the Jan 35 puts in his name.
No, me neither. Another thing is like a company. I think this company, the name of the company is just too clever. New Relic. What the heck does that mean? Like New Relic. It's are they trying to outsmart themselves with their? New is new and Relic is old. So what the heck is all that supposed to mean? So,
well, their awesome description doesn't fill it in for you. A California-based tech company that develops cloud-based software to help website owners track the performance of their services. That doesn't fill it all in for you?
You know what? I'm looking at that. I just couldn't put it all together. But to land all of their telemetry data in one place. All right. I guess that is telemetry data is something from, GPS or something like that. Anyway, I was let's just put it this way. The name of the stock, the paper, everything confusing. So I'm just we can put it in a to-be watch, but the thing is like, why the heck would he buy those puts?
Exactly. That's another reason why I thought they bought him at first, but I was like, why? Why would you do this? So I think the trader in me said, I hope they sold these. Ugh.
And I could, because the stock, it's, it trades at kind of a high multiple. It's one of those sort of early, it feels like it's, it has revenue, but, the low of the last year is, $45. So yeah, like you would think paper would want to sell those and, go for the yield play, but, it just the way the markets come out afterward, it just is, I don't believe that, sadly.
Well, we shall see out there. We shall see. Let's end it on a more optimistic note. Let's have someone buying some calls. That was hard to find today, listeners, but we did find one. This was in NEOG Corp. ticker symbol NEOG, N-E-O-G. This is an international food safety company that provides test kits to detect dangerous substances in food. So there you go. An important area. We all want our food to be safe. Trading right now, $19.61. That's an interesting level. We'll get back to that in a little bit. Let's see. It's up about 5% or about $1 today. So a nice pop for Neogen. On the year, a different story. A year ago, it was trading $36.39. That was pretty close to the high for the year. And they pretty much sold off every other day since. They got to their low for the year of October 20th of about $10.50. Since then, they have rebounded back up to where they are right now, $19.63, including a nice pop of $1 today. So some folks liking what's going on. Looks like they got an upgrade out of IBD there. So maybe that's helping to lift the stock out there. Somebody is clearly liking Neogen a little bit more today. And that's also the case with the paper, Mr. Rock Lobster. Someone came in this morning and scooped 2,500 of the Jan expiring on the 27th. So these are popping off next week. The 19 calls, they paid 60 cents. That's why I said that 61 cent level where the stock is trading right now, 1961, is important because that's pretty much the break even for these calls. They paid 60 cents for these bad boys. They were 40 at 65 back when the stock was 19.11. So they got a nice little pop for these. There are earnings between now and, well, actually, there are no earnings. The earnings are on March 23rd, and obviously they must have just popped off recently here. So no earnings between now and next Friday when these calls go away. But Mr. Rocklops, they got a little bit of a pop on these. And we all know when you're trading weekly options, you got to get while the getting's good. You think they'll come back to close these, or will they ride these to oblivion, sir?
Well, sadly, a lot of these call purchases have been ridden into oblivion, if I'm not mistaken. I think you buy calls to close them and you sell puts not to close them. So in this particular case here, let's see, I guess they could hold through earnings. What are these? The Junes?
No, these are next Friday.
Yeah. These are next Fridays, right? And they're Jan 27th expiry and 19 calls. I'm just pulling up the stock. Well, I mean, they are in the money a bit. But the question is, will they close them? You're asking. Again, not an easy close, kind of an illiquid stock. But my guess would be is they bought them. They were right on the rally. Anyway, I think it appears, at least from today, they're keeping them, and then we'll see what happens. There's actually actions on some 19.5s as well. Not a ton, but 400 trades. So my guess is they hold them for a little while, or possibly a little news on here, because it's a pretty aggressive purchase for Neogen food and animal safety. I don't even know what that means. Range of products and services, food and animal safety. Interesting. Diagnostic test kits and stuff like that. I don't know. I don't think this is a bad call purchase, because the price of the options relative to stock move is very, very low. I don't think this is bad. I think they're going to continue to ride this, but it's not a bad purchase. Like, another thing is, like, the volatility has gotten very low in here. It's like in the 37% range. Yeah, kind of a weird one here. So this is maybe like interesting. It's an interesting. I think somebody's just trying to buy some, jump on some calls in a cheap growth stock. That's kind of what I see on this one. And from a price point of view, I think they got a lot of leverage for 60 cents. So the trade is up money, so duh, I like the trade, but I don't think it's a bad leverage play, to be honest, for this one.
Yeah, it's working so far. So they got a little bit more time. We'll see if they come back early next week and decide to dump these, or they let them ride and see what happens as we let the show ride right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to the strategy block. You didn't get them on Monday, but I knew you were waiting with bated breath for your dose of strategery. So we'll get it to you on Thursday this week instead. Mr. Uncle Mike, sir, what do you got in store for your fans this week?
So what I want to go through today, I think it's really important that when you reset your trading account, that you don't lose sight of your initial objectives. So with that being said, I'm going to just tell a story today about a client in an annual review we were doing. And I'm just going to take it out of the buy and hold section for sake of simplicity. So on this, in our buy and hold section for the market, we lost money last year. And I don't think that's inexcusable for a buy and hold portfolio, especially when the market's down. But when we were talking about it, one of the things that we were saying was that stocks like Apple and Amazon and Google and things like that, those are stocks that I'm personally comfortable holding for a long, long time. So I'm willing to ride the ups and the downs with stocks like that. Now, on the flip side, there was another client that I had that recently inherited a bank stock that they had nothing to do with or didn't buy. They just inherited it. And so that stock was appreciated in value from the date of the client's mother's death. And because of that, by the way, even if you sell the stock, if it's based upon step up on death, you can sell the stock before the year runs out, and it's still long-term capital gain. Random tax fact for those of you that may or may not have known that. But with that being said, the client was asking me, she had said, do I want to keep this stock? And I said, no, you don't. And she said, oh, is it a bad stock? I'm like, well, no, not necessarily. But this is such a large position with which you've inherited. The client had some siblings, and long story on how the inheritance went. This is such a big position for your portfolio. This stock may or may not be good. I don't know the stock. It was a very small company, so I don't want to say it or anything, but it was a very small company. And when the client was talking with me, I was saying, is this a stock that you would feel comfortable riding the ups and downs throughout the year? Throughout the years, something that you want to hold for another 5, 10 years, 20 years, whatever. And if all of a sudden this stock goes from $18 a share down to $13 a share, are you like, oh, that's fine. I'm comfortable with the company. I know it. I like it. Or would this scare you? Well, I don't know if it would scare you or not, but it would scare me. That's what I told the client. And so, we talked, and then so we will be selling that stock most likely. We meet again in another week, so it'll be determined at that point. But my point is that if you're in a buy and hold situation and things don't necessarily go your way, buy and hold means buy and hold. So in other words, for my clients that are in some of those stocks that I mentioned, we're staying in them. I believe in them. And this can also apply to trading from the standpoint that that client, over the course of the next few months, we may or may not make money on that stock, but we're going to stick to what we believe in terms of doing things very aggressively with a small amount of money, hedging if that's the case with larger amounts of money, and doing some buy and hold investing. And so that's what we're going to do with sticking to what we actually believe in, the most tax efficient manner, of course. But that's where I think it's very important that as you are looking at your portfolio, because a lot of people like to look at things in January, New Year, I want to look at my portfolio more, I want to do this, that, and the other. I think it's important that you keep with what your initial objectives are. And then if you do feel that it's time to change them, saying, oh, I don't want to trade this strategy anymore, or I don't want to invest this way anymore, that's something you need to take a lot of time to think about and make sure that it's in line with your long-term financial goals. So that is the strategy block for today.
All right, then let's keep on rolling. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, as we're coming into the end of the show, we have a little bit of a rally here in the markets. They're not green on the day by any means, but S&P is only off about 0.5% now. NASDAQ off about 0.7%. They were off more than that as we were kicking off the show. So maybe a bit of a turnaround is in order, up about 10 handles in the S&P since we started talking. Let's go around the horn, listeners. Oh, by the way, I said I would pay off how our poll is looking so far. And right now, listeners, again, just went live yesterday during Options Bootcamp. But right now, our poll is zero DTE trend exploded in 2022. Is this just a fad, or is this the wave of the future? And right now, almost 2/3, 65.4% of you are saying it is here to stay Only 34.6% of you think it's a fad. Get over there at Options is the place to go to make your voice heard. Mr. Rock Lobster, what do you think? You think it's a fad, or you think this zero DTE thing is here to stay? And then B, what are you keeping an eye on until our Monday episode, sir?
Oh, the zero DTE thing is definitely here to stay. I think it's only going to get bigger and bigger and bigger. Because as we have seen with products like this, they just, once they catch fire, they keep going. They rarely ever back off. Like, VIX, VXX, SPX, those were stuff that was introduced that started right away and just kept taking off. So I see them as just kind of continuing on. And what am I looking at? Again, I think we're going to go a little sideways. I think this could be a good premium selling market, to be quite honest, like iron condors and stuff like that. So as soon as I'm able to sit in front of a screen full time again, which will be Monday, those are the kind of trades I will be looking at. Personally, I think we're kind of going to be in a little sideways market. It's a lot harder to do that buy the call and watch it go up thing in the short term.
It is. Uncle Mike, same question for you, sir. Are you believing these zero DTE things are a fad, or are they here to stay? And then what are you keeping an eye on until our Monday show?
Most of the time, I'm typically of the school of thought that it's a fad. Most of the polls that we've done, and I'd be curious, Mark, if you have any possible way of getting all the data whenever we've said, is this a fad or is this here to stay? The percentage of the time that turns out to be a fad, and it's going to be a fad most of the time. But this one, though, I'm a fan of the zero DTEs. I don't see myself using them. You never know, I might, but I think they are here to stay because there's a lot of day traders out there that I think are going to have a lot of interest in them. So I think that they are something that's going to be here to stay. And the fact that I just remember through the years of begging exchanges on this show to get it to where we don't just have the 2-week weeklies, because that was like all they had to start out with at first. Then they went to 2 weeks and 1 week. And then eventually, of course, we can pretty much get a daily option right now in most things. Yeah, I think the zero DTEs are here to stay. So I like that. And then in terms of some things with which I'm watching, 3,900, I think we're going to hold that. But we'll see. I could be wrong. If not, if we don't hold it, history tells us the last 6 months, we'll get back to it pretty soon if we don't. So I'm a fan of this market, and we'll see if I'm right or not.
Remember, never forget, the Rock Lobster also says he's a little optimistic, which means, listeners, a look out below. Unfortunately, that music means we've come to the end, at least, of the option block. Don't worry, all you pro folks. We'll be back in a few minutes with TWIFO breaking down all the action out there in the world of futures, options, and then you guys don't have to wait at all. Coming right to you immediately, all you on-demand folks. You'll have to get it when it hits the network there. And let's go around the horn one last time. Let's start with the Rock Lobster. Sir, if folks want to reach out to you, see what's cooking in the land of the pit, where should they go? What should they do?
Yes, go to optionpit.com, ask for Ted or other Andrew, also 888-TRADE-01, and you say you heard this show, you get 10% off. There you go.
There you go, optionpit.com. Ask for the other Andrew, the pleasant Andrew, and then you too can get 10% off. Safe journeys back to Maine, Mr. Rock Lobster, sir. Next time we talk to you, you'll be back in your comfortable environs of Maine. I know travel is a big deal for you. Getting the curmudgeonly New Englander now out of New England's challenging.
Yes, I have no interest in travel anymore, but I'm glad other people do.
There you go. So he'll be back in his comfy environs on Monday, listeners, and we'll talk to him again then. And Mr. Uncle Mike, you're always in your comfy, cozy St. Charles. Where should folks go if they want to learn more?
stcharleswealth.com. Follow me on Twitter at Mike TOSAW. Plenty of content coming this year, folks.
Plenty of content indeed. stcharleswealth.com is the place to go. We got to get on out of here. Back in a little bit for all things TWIFO, listeners, and then back again tomorrow, noon Central, 1 p.m. Eastern for volatility views, and then back again after that for a dose of options oddities for all you pro folks, and then back again next Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.